Welcome to the Deep Dive. Today we're diving right into Zoom's first quarter results for their fiscal year 2026. They just came out May 21st.
Yep, hot off the press. Our goal here is basically to cut through the noise, pull out what really matters about how Zoom's doing and where things might be heading.
Exactly. Let's get straight to it.
Okay.
Overall financials, Q1 looked pretty good, actually. Total revenue was $11,174.7 million.
Which is up 2.9% year over year, or 3.4% if you adjust for currency.
And importantly, they beat their own guidance on that.
Always a good sign, right? Shows they have a decent handle on the business, even now.
For sure. And profitability looks decent, too. GAAP operating margin, 20.6%. Non-GAAP was quite a bit higher at 39.8%.
Yeah, that non-GAAP number really highlights the operational side once you strip out some of those, non-cash items. Shows underlying strength.
Right. And earnings per share also beat expectations. GAAP EPS hit $0.81. That's up nearly 19% from last year.
And the non-GAAP EPS was $1.43, up 6%. So again, beating forecasts there, too.
And Eric Yuan, the CEO, he put it down to the strength of our platform and AI-first innovation, even with the, quote, uncertain macro environment.
Which tells you where their focus is. They're crediting the platform itself and that big push into AI for these results, while still acknowledging things are, well, uncertain out there.
Okay, so where are the money actually coming from? Let's break down the revenue. Enterprise was up.
Yep, $704.7 million. That's a 5.9% increase year over year.
Yeah, it's now 60% of their total revenue, up from 58%. So that shift towards bigger clients seems to be continuing.
It definitely is. Those larger contracts, more stability, more potential to upsell. It's a solid base.
But the other side, the online revenue,
Yeah.
Individual, smaller teams that actually dipped a bit.
Just slightly, down 1.2% year over year to $470.0 million.
But interestingly, they said their online churn, the rate people leave, actually improved.
Yeah, the average monthly churn got better, so fewer online customers are leaving, even if the total revenue there slipped a tiny bit.
So maybe focusing on keeping the online folks they have.
Could be. Lower churn is always good long term. We'll have to see how that plays out, whether it's about retention over aggressive new acquisition in that segment for now.
Right, something to watch. Now, about those bigger customers, the ones spending over $100,000 a year with them.
That number went up too, by 8.0% actually. They now have 4,192 of those clients.
Wow, okay. And those customers now represent 32% of total revenue.
Which really underlines that enterprise focus. They're getting more of those big fish, and those fish are a huge chunk of the business.
And how much are existing enterprise clients spending compared to before? The net dollar expansion rate?
Holding steady at 98%. So basically, existing enterprise customers are spending almost exactly the same as they were last year, on average.
Which means retention is super high, even if the upsell within that base isn't massive right now. Still, 98% is pretty strong.
Oh, definitely. Anything near 100% is generally seen as really good, shows the value proposition is holding up for those key clients.
And we mentioned that online churn improvement, it dropped to 2.8% monthly.
Which they said was their lowest Q1 churn ever, down 40 basis points from last year.
So they are doing something right to keep those smaller online customers sticking around better than before.
Seems like it. Those efforts are showing results, potentially stabilizing that side of the house.
Okay, let's shift to the really buzzy topic. AI. Zoom is pushing this AI-first innovation line hard.
Very hard. It's clearly the strategic centerpiece right now.
They launched a whole bunch of new stuff this quarter. Zoom tasks, AI companion features for the calendar, custom AI companion.
Right, and also specialized versions of Zoom Workplace for frontline workers and for clinicians. AI is getting woven into everything.
And it seems like people are using it. The main Zoom AI companion saw monthly active users jump by nearly 40% just in the last quarter.
That's huge growth. Quarter over quarter like that suggests users are finding it genuinely useful pretty quickly. Summaries, action items, that kind of thing.
Yeah, it's not just hype if usage is growing that fast. They gave an example to Raymond James.
The financial firm.
Yeah, they're rolling out the AI companion meeting summaries across the whole company.
That's a great real-world example. Shows the practical value proposition for a large organization saving time for their advisors.
Exactly. And while that core AI companion is often included, they're also starting to charge for the custom AI companion.
Right, the one you can tailor more.
And they said initial trials with big Global 2000 companies are showing strong enthusiasm, especially for things like custom knowledge bases or integrating with tools like Jira.
That's really promising. It shows big companies might actually pay extra for tailored AI within Zoom, opening up a new revenue stream.
Definitely one to watch.
Yeah.
Okay, so beyond AI, what about the platform itself, how it all fits together?
They're really pushing the idea of Zoom Workplace as this single integrated platform. The idea is if you use meetings, maybe you'll add phone, maybe WorkVivo, because it all works together smoothly.
Creating that sticky ecosystem, right? Harder to leave if you use multiple pieces.
Precisely. And they had a great example, the Boston Celtics.
The NBA champs.
Yep, the new champs. They apparently upgraded to the full Zoom Workplace Enterprise Plus, which means they added Zoom Phone, and they also adopted WorkVivo for employee engagement.
That's a big win and a great logo to have expanding like that. Shows the platform message is landing, at least with some high-profile clients.
Absolutely. They also mentioned another big win, a leading financial institution.
Over $1 million in ARR.
Yeah, consolidated onto Zoom, moving away from competitors like Microsoft Teams, apparently. And they're looking at the Zoom customer experience platform, too.
Wow, pulling a big financial firm away from Teams is significant.
It really is. Shows they can compete head-to-head in those complex enterprise deals.
And Zoom Phone itself, how's that doing?
Still growing well, revenue up in the mid-teens year over year.
And they mentioned something interesting, growing adoption of its integration with Microsoft Teams.
Yeah, which is smart. Instead of trying to force a full rip and replace everywhere, they're letting customers use Zoom Phone alongside Teams if they want. Play nice where you need to.
Makes sense. Okay, what about those other maybe newer growth areas like the customer experience stuff?
Doing really well, it seems. Customer count for Zoom customer experience up 65% year over year.
65%.
Yeah, and they landed their biggest ever deal for Zoom Virtual Agent. The whole CX business is now doing triple-digit millions in annual recurring revenue and still growing fast, high double digits.
So that bet on the contact center space seems to be paying off nicely.
Definitely gaining traction. They also mentioned Mimecast, the security company.
Right, they expanded their deal.
Yeah, they were already using Workplace and Phone. Now they've added Zoom Contact Center Elite. So another example of cross-selling the platform.
And good validation when a security-focused company trusts more of your stack.
Exactly. Then there's Zoom Revenue Accelerator, the sales intelligence tool.
How's that growing?
Licenses up 72% year over year. Pretty rapid growth. Goosehead Insurance added it on top of their Zoom Phone deployment.
So tools specifically for sales teams are finding an audience too.
Seems so. And lastly, in this high growth bucket, WorkVivo.
The employee engagement platform they acquired.
Customer count for WorkVivo more than doubled up 106% year over year.
Whoa. Doubled.
Yeah, they said the partnership they struck with Meta helped accelerate that growth significantly.
Interesting. So that's really taking off. Okay, let's talk strategy shifts, partnerships, people.
Well, they brought in a new chief marketing officer, Kim Storin.
Key hire as they keep pushing up market into the enterprise.
Definitely need strong marketing for that. They also announced a new strategic partnership with Bell Canada.
Expanding their reach through partners.
Exactly. And they mentioned they've been revamping their channel systems to support partners better. Seems like a bigger focus there.
Did they give an example of the channel working?
Yep. A win with DOCS Dermatology Group came through a channel partner, and they adopted Contact Center Elite, Phone, and Workplace. So a full platform deal driven by a partner.
Nice. Shows that channel investment might be starting to bear fruit. Okay, let's look forward. What are they forecasting?
For Q2, the current quarter, they're guiding revenue between $1.195 billion and $1.200 billion.
So continued slight growth sequentially.
Right. And non-GAAP EPS expected between $1.36 and $1.37.
Okay. And for the full fiscal year 2026?
They actually raised their guidance.
Oh, okay.
Yeah. Full year revenue now expected between $4.800 billion and $4.810 billion.
Slightly higher than before then.
And non-GAAP EPS guidance also bumped up to between $5.56 and $5.59 for the full year. Plus, they're projecting pretty healthy free cash flow, $1.68 to $1.72 billion.
Raising guidance is always a good signal, suggests confidence for the rest of the year.
It does, though they added a bit of nuance there. They said the online business outlook improved partly because they raised prices on some monthly plans.
Ah, okay. Price hike helping the forecast.
But they offset that slightly with a more cautious view on the enterprise side, specifically citing that macroeconomic uncertainty we talked about earlier.
So they're seeing maybe slightly different dynamics. Easier to raise prices on smaller users, but big enterprise deals might still face some headwinds from the economy.
That seems to be the picture they're painting, a bit of a balancing act in the forecast.
Got it. And finally, cash position and what they're doing with it.
Still very strong. Generated about $463 million in free cash flow just in Q1.
And they ended the quarter with a huge pile of cash, right?
Yep, around $7.8 billion in cash, equivalents, and marketable securities. Loads of flexibility.
And they're putting some of that cash to work, buying back stock.
They are. They repurchased about 5.6 million shares in Q1 for around $418 million. They mentioned accelerating the buyback program.
Signaling they think the stock's a good value and boosting EPS by reducing the share count.
Exactly. It shows financial strength and a focus on shareholder returns.
Okay, so let's try and wrap this up. Key takeaways from Zoom's Q1.
Well, first off, solid quarter, beat their own guidance. That's always positive.
Right. The shift to enterprise continues. Those big customers are growing and are a huge part of the revenue now.
Definitely. And while online revenue dipped slightly, churn improved significantly there, which is a good sign for stability.
And the big story really is AI. That AI companion adoption is booming, and there's early interest in the paid custom versions.
Yeah, AI is central. And the integrated platform, Zoom Workplace, seems to be driving those multi-product deals like with the Celtics or that financial institution.
Plus, those newer bets like customer experience and WorkVivo are showing really strong growth momentum.
Absolutely. And underpinning it all is a strong cash flow and balance sheet, allowing them to invest and return cash to shareholders.
And they raise the full-year outlook, which signals confidence, even with that note of caution about the macro environment for enterprise sales.
Pretty much sums it up. Solid execution, clear strategic focus on AI and platform, and navigating the current climate reasonably well.
So for you, the listener, the big question is probably, how will this AI-first strategy and integrated platform approach from Zoom actually change the way we work and communicate down the line?
Yeah, what doors does it open? What challenges does it create for businesses, maybe even for competitors?
Something to think about. If you want all the granular details, definitely check out the full earnings report and the investor presentation on Zoom's site.
For sure. Lots more detail in there.
Thanks for joining us for this deep dive.